Hello guys, and welcome to another video here with Invictus. My name is Robert Sutu. I'll be the creator of this content, and I'm the guy that's trying to make a sense of what's going on in the market. So moving forward for the next week or so, I'm going to be trading solely in the MES. I'm going to be trading with 5 contracts, and I'm going to do my best to limit my risk and exposure to the market, especially with impending war that's looming on the horizon between Russia and Ukraine. Has definitely made the markets a little bit more volatile. So for my own personal risk management, I'm going to take a step back and look at the MES. You guys definitely moving forward. If you haven't developed a risk management plan, I definitely encourage you to do so. This way, you're able to better prepare yourself for anything that may potentially happen in the market. So, with that said, I will be trading in an MES. Today's February 22nd, and the market was kind of crazy. Monday was a half a day. The Monday sold off considerably. Monday evening at 5 o'clock Central, we went ahead and opened with a gap down in the market, as you can see on a 6,000 tick chart. We had a nice gap down. Then the gap got filled. Market moved up overnight into the 360 area where we kind of sit at right now. I was able to take 2 trades back to back, and a 0.700 to time frame put me up a little bit over $200. And as you can see from the chart, I still had 7 contracts on the table. I was still kind of playing around trying to figure out, should I go with 5 contracts? Should I go with 8? It has been a while since I traded in the MES. So as we move forward with the video, just bear with me. I'm going to fast forward this whole entire day to kind of give you guys a better glimpse of everything that went on. So as you can see, this particular time frame, I was getting ready to get stopped at over here. So just going to fast forward. All right, so we got the market open here. I was able to draw a nice rising support line over here that got broken at the open. The market was trending down. I broke the 200 EMA on a 1,000 tick chart. In addition, it broke the 50 EMA on a 6,000 tick chart, and it was heading lower. I'm drawing up some channels on there, trying to be able to better gauge the support and resistant areas. And if you guys are not trading with channels, I definitely encourage you to start studying up on them and become proficient at them. It's a very valuable tool to have and being able to determine the market direction. It takes a little practice, a little know-how, and with time, you'll be able to plot them and get them out right pretty good. All right, as we move forward, the market is kind of taking its time deciding what it wants to do. All right, at this point, I am seeing an opportunity for a short trade. Again, I'm anticipating the market to go lower based on the action on 6,000 tick chart and 1,000 tick chart. I'm drawing up a channel line out of 6,000 as well. So essentially, you go off the highs and then you try to spot the lower high and the higher high, and able to kind of get a channel going. And usually, overall, those price areas get respected pretty well in overall price action. I got a decent channel on 6,000. Also got a 2 possibility of a channels on a 1,000 tick chart, and this is where I'm keeping an eye on the action. See if it goes below the 200 EMA again. If it stays above the 21. So we'll see what happens moving forward. All right, zoom in a little bit on this, and I will go ahead and take a short, anticipating the price will retrace back to either form a higher low or continue with the breakdown. As you can see, we got our order filled. I'm repositioning my targets again. If you haven't watched any of my previous videos, my trading style is to take as much profit off the table as fast as I can. So usually, 2/3 to 50% of the contracts will be taken out in the first 3 points. In this particular area, I have a 12 tick stop, 12 tick first target. My stops are dictated by the ATR. And the ATR in this particular day was a little bit higher, so I wasn't able to go back and change my template. But again, you'll see me move my stop loss a little bit. Again, that was based on the ATR and what it was at that particular time. But generally, you leave your stop loss in place based on what your template is. And for my instance, I trade based off the ATR. So 3 contracts will be taken right off the top on 3 points. The second contract, a second target will be dictated based on your discretionary measures, and then we have a runner in place. So as you can see, we're getting ready to hit our first target.
Target filled.
All right, we got that first target. Once we get our first target hit, we move our stop to break even. This way, we are in 100% risk-free trade now. We're going to be making money. Right here is the kind of you know opportunity to take a look at the market, see what's going to develop. As you can see from this, the price is kind of slowing down. I don't know that it was at this particular time, but you have to be prepared for everything. So as you can see, right now the market is in the process of continuing lower. I'm anticipating the market to continue lower. And at this particular time, the buyers are moving back in. As you can see, now we are in a process of forming a higher low. It's also known as a seller failure.
Stop filled.
Again, seller failure pattern. I'm able to recognize this right now. We have a higher low. The buyers are moving in. And at this point, I am preparing to go long. The biggest caveat right now, if you take a look on a 6,000 tick chart, it was the biggest indicators we had. This particular candle that pushed up higher, a lot of buying pressure, and then the other subsequent candle that formed a seller failure pattern essentially was just nothing but a hammer candle. That right there to me was the indicator that, hey, the selling is gone. You better get on the right side of the trade and go along with it. So moving fast forward a little bit, we broke that first channel line that we had. There's a lot of buying pressure, and
Order filled.
just going as fast as I can right there to get it. The ATR, I believe, was around 3.7, so I kind of moved my stop loss according to that ATR.
Target filled.
And before I can even adjust all my targets, the first target got hit. So price to break even, and now we're just going to sit back and take advantage of this opportunity. Right here, you want to see the buyers moving hard. You don't want to see slow motion up. You want to see buyers moving hard with some good momentum, and that's what you're going to see take place in this particular instance. Let's fast forward, and as you can see, we're getting ready to hit our second target. A little frustrating right there. Usually the price kind of, periodically stops a tick or two before your first target. I mean, excuse me, your second target or your first target. And it gets a little frustrating, but patience where you have to sit back and just be really patient. We're on the right side of the trade, and we just got to let those targets run. All right, our second target gets hit. We move our runner up to the high of the day. Excuse me, the high of the overnight market. And now we're just trailing. So right now we have a seller failure pattern. I'm anticipating a pullback. Predominantly the market goes into seller failure, into pullback, into strength. So right now I'm anticipating the sellers to move in. If they do, it gives you an opportunity to add on a second order and take advantage of that momentum. So as we move forward, you can see sellers are beginning to move in here. As the general rule for me, I personally wait until the close of a greenish bullish candle to go ahead and add on a second order. You want to find the point of where sellers or buyers have a predominantly good area of stop loss. You want to buy into their stops. So right here, somebody shorting the market. Some traders are thinking, hey, this is going to be reversing here. We're good to go. But on the other side, it's not going to happen. So you want to buy into their stop losses. This way you have a good momentum pushing forward to at least hit your first target if you have a good order in place. So as we can see, buyers are moving in now. And right here is when I go ahead and get ready to place a second trade.
Order submitted.
All right, we want to be patient. We want to wait for the close of that strong candle. You don't want to put it before then. You want that candle to develop. So just patiently wait for it to close. I was a little hesitant at first. That candle didn't close that strong. We had a very long tail wick on this bullish candle that closed, and that to me I was a little hesitant, and you can see me pull back my order just a little bit, just kind of give it a little bit more time to develop and see what's going to happen. I was to base my trade just on that candle alone, I would never take in that trade. I would just cancel the trade and walk away. That would indicate to me that this indeed would continue lower. But again, you just got to be patient, let the market develop. And as you can see, the buyers are moving back in. Second candle is a little bullish, and I want to see a good strong body on that candle. And again, we're seeing that. We had a good close on that candle.
Order filled.
I placed my order one tick above that candle, and then just got to let it run. Again, the ATR was around 3.4 at this time. I moved my stop loss just a little bit underneath what I perceive to be a good area of support, and this way it kind of minimizes the risk of you getting stopped out prematurely. And as you can see, barely touched our price, didn't get filled, one tick underneath it. And the market will do that. The market will tease you. I want to piss you off a little bit, but you just got to be patient and don't move your targets around. Just leave them be. Right here, I'm trailing with my previous order, my stop loss. Always trail. Don't leave money on the table. Try to take as much of the crumbs off the table as you can. As you guys can see, it's flirting with that first target. As tempting as it is to try to move that, you always want to leave it alone.
Target filled.
All right, we get our first target filled on that second add-on order, and right now we're trailing the stop. Again, I'm gonna move that target to the high of what I perceive to be a measured move. It's your runner. Your runners are your Hail Mary pass.
Target filled.
All right, we got that other target filled. So now we're just sitting there with two contracts. But again, your runner, it's your Hail Mary pass. You have between a 10 to maybe 15% chance those will get filled. Usually your first target is your high probability targets. Those would be 75 to 80% chance that they get filled. Your second runner is usually between 50 to 60, and then the probability of your run to targets, your last contract getting filled is very low. But again, you want to give plenty of room and just take advantage of the market as it rolls forward. As you guys can see from this, right now we're just in the money. We're just going to trail the market as the buying pressure continues. Let's fast forward it a little bit. Right here, I'm just kind of being very indecisive in regards to where to place one of those runners. I'm trying to take advantage of the price to the best of my ability. So again, I just move it back to the overnight high, and then I had the other one at 55. I chose 55 because looking at the Fibonacci retracement on the 6,000 tick chart, the 71.4 was at 357. So I figured 2 ticks, 2 points underneath that should be sufficient in regards to as a measure move. And as you can see, the previous rising support now will act as resistance. It behooves you guys again to learn the rising supports, to learn the channel lines, develop your trading style to be able to go ahead and put those on the charts, because they're a very strong tool. All right, as you guys can see, it's the price is just rocketing upwards, and we're getting ready to get that other target hit. Again, trailing your stop loss. I usually place a 2 candle trailer, so as soon as we make a higher high on the candles, I'll move my stop loss up 2 candles. Just moving up the candles, moving up the stop loss just increases the chances of me taking as much money off the table as I can. And right here, that rising support line that was resistance, now it's going to act as support again. So I'm definitely keeping an eye on that price action right there. And this I want to point out a wonderful opportunity here, that teaching lesson for, say, if you look at the MACD on the RSI on a 1,000 tick chart over here, it could indicate to you that, hey, the market is overstretched and is getting ready to turn over. A lot of young traders, including myself when I first started out, I used to base a lot of weight on these MACDs and RSIs, and I would exit a trade based on what I perceived as the market turning. In this particular case, the market is not turning. Market will continue forward just a little bit longer, as you will see. But again, basing your decision just solely on the MACD and RSI is a very poor choice. Those are indicators, lagging indicators, and I'm very wary when it comes to planning my exit trades, just basically based on the MACD and RSI. As you can see, the sellers are really struggling to push that below that rising support line now. It's becoming good strong resistance areas for the sellers, and we want to take advantage of that. Let's fast forward it as this continues. As you can see, as the sellers try to push it below that, the buyers tend to move in a little bit and keep it above that. That's a good indicator to me that, hey, this is going to continue higher. How high? We don't know, but that's where we have the stop loss trailing behind that, just take advantage of the market. Oh, all right, let's fast back it up, and you can see here the buyers move in strong on this one.
Target filled.
We hit that last target, and now we're just going to trail the heck out of that as fast as we can. We're going one candle trailer now. We're just going to be tightening it up. As you guys can see, it's a calculated measure move. It barely got to the area. So one target trail now. We're just going to get as much money off the table as we can.
Stop filled.
There it is. We took our money. That was a phenomenal trade. And this is how you're able to consistently make money off the market. You don't want to get greedy. You don't want to put all your eggs in one basket and set it at the most extreme. You will get lucky periodically. You will make a lot of money, but nine times out of 10, you will lose as well. You want to take your money in stages, and definitely be responsible in regards to taking that money. We would have hit our measure move over there, but again, you never know. You take your money, you get out of there. Your job is to take as many crumbs off the table as you can. A lot of people focus on a bigger picture, trying to get greedy, and in turn, they lose money. So let's fast forward, see what's going on here. All right, again, trying to develop a channel line, trying to see what's going on, see if we have anything to work with over here, and this is a sustainable push up. And right here, I'm just kind of going off the previous pivot points, trying to see if I could have a good area for buyer traps or buyer failure patterns develop. Usually at previous pivot points, we'll have strong resistance lines. The price will retrace back to those areas and will either shoot up really fast, setting up a trap for the sellers, and then have an opportunity for that price action to continue higher. And as you can see, we have two pivot points on this move up. So I'm anticipating between this area right there to have a retracement and a potential either continuation of the bullish momentum or a retracement back to lower prices or the range. So as we can see, we're continue to draw channel lines. At times it gets to be a very confusing chart with all the lines on there, so definitely utilize your color codes. As we can see, the market is just having some profit taken now. Previous pivot points will act as support and resistance. A lot of people tend to scalp or get into trades like that. I wait for a better opportunity, and I try to discipline
Order
myself.
filled.
All right, so what happened over here? Let me kind of go back. As you can see, we are able to have this particular area between these two pivot points. Price pulled in that area, bounced off that channel line a little bit, was heading for the 200 EMA, colored in black over here on a 1,000 tick chart, was not able to reach that price area. And what we have again is another seller failure pattern. This time though, we have a big lower low on here. So to me, it's not that strong of a seller failure pattern, but again, it still develops into a good trade. So as we can see, we get aggressive based off this strong bullish green candle. And again, I'm putting my targets and moving them around. Again, your first target stays put, your second and your third are discretionary, and you can move it around as much as you want.
Target filled.
All right, we get our first target filled. We move our stop again to break even, and again, the high probability trade happened. Your first target is a very high probability trade. If you trade from a point of good support or good resistance, for example, that chart pattern that we saw gave us a high probability trade. Again, if you look at the 6,000 tick chart again, big signal candle. Again, similar to like prior, we have big hammer candle, and then this essentially tells me that, hey, buyers are moving in. They moved in off the range. It was a good value area for them. They're able to trap in some sellers, and this is right here is a good target. But again, we had a big move up. So again, to be expected, if you have a solid move up, expect the market to retrace back to that area and try to retest those highs again. And I took advantage of that with that little seller failure pattern we were able to see. And again, right now, the market's moving up, but the biggest clue, contextual clue we have here that this is a weak move up is the fact that the market now is not trending up as high as it was before. Before, we had a lot of buying pressure behind our price action. Now, the market's kind of getting staggered. It's stalling out. And you don't want to see that if you're a buyer. When I was a younger trader, an immature trader, I would take advantage of this and put all my eggs in one basket and let it, thinking this is going to be a continuation of the upswing like previously seen. But again, this right here to me indicates a very bearish action moving forward. It may not happen within the next 20-30 minutes, but again, to me, this shows me that there's trouble in the water, and it's definitely not the momentum that I want. And as you can see, it's just price is clawing. It's not as smooth as it was before. And again, that rising support now is going to act like resistance. It almost appears like it's going into a wedge pattern. And as you can see, that price is just not right. And that's where, again, you just trail your stop loss. You're trying to maximize your profits and take as much money off the table as you can. And as you can see, the buyers are buying it off that 21 EMA highlighted in red on a 1,000 tick chart. They're buying it off that channel line. But they're just not taking off with it. And right here, I believe we're going to hit our second target. All right, we're trailing again, right below that price action on 21 EMA. We have our stop loss. And again, it's just not working. I move my stop loss
Stop filled.
as fast as I can, and right there is what happened, guys. Again, I hope you guys enjoyed this video. That previous action, I hope it showed it to you guys. Let me kind of go back a little bit. As you can see that we hit that previous rising line of support, and it turned into resistance now. And the buyers were just not there. I believe the market trailed up a little bit further, but ultimately collapsed on itself and went back into the range. I believe at the making of this video, the market was trending down around 43.10. But again, if you take a look at the 6,000 tick chart, we had a significant move up, big bullish move up. The market wasn't able to continue. There's a potential for an ABCD pattern. We pull back to a value area. Buyers move in hard again. And this signal candle on a 6,000 tick chart tells me that, hey, the action is over. The buying pressure is not there anymore. Sellers are possibly going to take control. Buyers are exhausted. In addition to that, just like we mentioned before, once we saw the seller failure pattern on 1,000 tick chart, that price just wasn't moving up as smooth as it was before. There was not that buying pressure behind that price action. Excuse me. So that tells me right there that there's trouble in the water, and definitely be vigilant about taking your profits and tightening up your stop losses. So I hope you guys enjoyed this video. Hope you guys learned something from this. Go ahead and please feel free to subscribe below. Um, Message me with any questions that I could possibly answer. And if you don't guys mind, we got a great Discord group that I started. There's a lot of great traders on there that we all share ideas and bounce ideas off each other and share our trading plan. It's The link is in the comments below, so feel free to go ahead and sign up for that. Thank you very much. Hope you guys have a good day and good luck trading.